Friday, September 25th. I'm Betty Lou, and we're live from Bloomberg's World Headquarters here in New York. Let's take a look at some of the other stories we're covering for you in this hour. How do we avoid another meltdown of mortgage-backed bonds? Well, one suggestion, have the government rate the bonds instead of the credit rating agencies. We're going to take a look at that option. Plus, the BlackBerry blues. Research in motion may have to sell more of the phones at lower prices to compete with the iPhone. Gold medals and the golden arches. When it comes to Chicago's bid for the Olympics, we've got the story of why McDonald's has to hide its hometown pride. Okay, let's get you caught up on where the markets are trading right now. Equity futures are indicating a higher open. As I mentioned, we're waiting for durable goods numbers out in half an hour. Treasuries mixed right now. You've got the 10-year higher and the 2-year a little bit lower after those auctions that we saw this week. The dollar weakening against the yen. In fact, you've got the yen strength pretty much across the board. For oil prices, strengthening as well, up by 17 cents, though, at 66.06. Well, the president is scheduled to speak in about half an hour. He is slated to say sayonara to the G8 and welcome the G20 as the new global economic forum. But the big question is, will the president challenge Iran over nuclear weapons? That appears to be the indication. Well, Bloomberg's Peter Cook is at the summit in Pittsburgh with the very latest. And Peter, what should we expect from Obama?
Well, the president will be talking about the Iran situation. Iran stealing the spotlight this morning here at the G20 summit. The president's going to speak at 8:30 Eastern time. According to a White House aide, he will accuse the Iranians of operating a secret nuclear facility, one unbeknownst, unpublicized previously, that enriches nuclear fuel. It's not yet operational, according to a story in the New York Times. And he will call on the IAEA to inspect this facility for Iran, to allow the IAEA in to inspect this facility. He will be joined by French President Nicolas Sarkozy and British Prime Minister Gordon Brown. That is happening at 8:30 Eastern time. So again, Betty, Iran stealing the spotlight from a very busy G20.
Well, tell us about some of the other major developments, though, at the G20 so far.
Yes, as I said, there's a lot going on here. We've got, in addition to the Iran situation, news today that the G20 nations will officially announce that this forum, this group of both developed nations and emerging economies, will in the future be the main global forum for discussing international economic and financial issues. That is a big headline here. People have been waiting for this transition to take place, this changing of the guard. But there are also major specific agreements expected to be announced in the communique later today on overhauling financial regulation around the world, agreements on bank capital standards, principles going forward with regard to bank capital standards around the world. Also, agreements, we're being told, with regard to compensation standards for those working in the financial community. This has been a very hot topic. We're being told that it's going to, those standards will fall short of direct compensation caps called for by the French and the Germans, but they will, for example, talk about bonuses being linked directly to percentage of revenue at banks going forward. This is, of course, a very important topic. And we're also expecting to hear some sort of agreement on a U.S. initiative to reset a framework for global growth going forward. This is an effort, Betty, to try and rein in some of the global imbalances going forward. Nations would commit, in the U.S., for example, to reduce budget deficits in the future. China would have to reduce its trade surpluses. This would be a very substantial agreement if indeed it takes place.
And how would it be enforced?
That is the big question here. Is it simply a voluntary agreement here? Is there any sort of enforcement mechanism whatsoever? Can countries essentially ignore it? That's some of the fine print we're all waiting to see in the communique today. Will tell us a lot more about how serious this effort is.
Okay, Peter, thank you. Some very interesting developments out of Pittsburgh at the G20 summit. In the meantime, investors will be watching two areas that help lead the economy into recession: manufacturing and housing. New data today may confirm they're leading the recession out, or the economy out of recession. Well, Bloomberg economics editor Michael McKee is here with a preview of the numbers we'll be trading on today. Mike.
Well, Betty, demand is up, inventories are lean, or leaner at least, so we are expecting growth in both numbers. Durable goods orders likely rose 0.4% according to the Bloomberg News survey. Last month, orders rose 5.1%. Won't match that today. Still, it will be the fourth increase in the last 5 months. And when you're in the hole the U.S. economy's faced, that's good news. Exclude cars and aircraft, the picture's even a little better. Orders up 1%. That would be the fourth monthly gain and the longest streak since November 2005. Now, car makers, including General Motors and Ford, are boosting production to rebuild inventories depleted by the government's cash for clunkers incentive. So we should see orders continue to rise. At 10 a.m., data on new home sales forecast to show sales rose 1.6% in August. August, reaching a 440,000 annual rate of sales, up from a record low rate of 329,000 in January. The Obama administration's $8,000 tax credit for first-time buyers, of course, helping lift sales, although it didn't do much for sales of existing homes, which, of course, unexpectedly fell last month for the first time since March. So play this data with Treasuries, as so many trading desks do, or for a longer-term bet, the XHB Home Builders ETF is up 185% since its March low, down almost 8%, though, since September 16th. We'll see if the numbers today turn it around. One other number today, consumers have been growing more optimistic, or at least becoming less pessimistic as the recession eases. So also at 10, the University of Michigan Index of Consumer Sentiment probably comes in at 70.5 this month, with 65.7 in August. That may give a boost to hopes for a pickup in consumer spending, of course, the key to the recovery. Betty?
Okay, Mike. Well, how's that going to affect the stock markets today? Let's get down to Suzanne O'Halloran. And Suzanne, we also had KB Homes coming out just recently with results.
Right, Betty. Moments ago, KB Home posting a third-quarter loss of 87 cents. That is wider than what some analysts were expecting. In the company's press release, the CEO says the timing of the rebound in the housing market remains uncertain. So, of course, housing is going to be very much in focus again today after yesterday's existing home sales numbers, which actually drove the market down. Right now, as you can see, shares of KB Home are down over 2%. This could perhaps present some challenges for housing stocks today. Also, another company we're watching in the technology space, of course, Research in Motion. That stock is off sharply as well. Their sales forecasts disappointed a lot of analysts. Betty, the company's co-CEO, saying that they are continuing to cut prices on some of their key devices to stay more competitive. But I want to check on the futures now, because after we did get that KB Home number, U.S. futures seem to be holding up well with respect, of course, to technology. Technology, probably one of the weaker areas, but nonetheless, we are looking at a modest rally. Of course, the economic data we're getting at 8:30 and 10, very important to investors, and that's really what dictated the session yesterday. We had a pretty sharp sell-off here on Wall Street. There are only several trading days left in the month. Some traders telling me there's a lot of portfolio repositioning. Today will give us another clue, Betty, which way investors should be going. Should they be buying stocks or cutting their positions? Back to you.
Okay, Suzanne. Well, an update I've got for you on that invisible army. Those are the lobbyists paid to shape the healthcare overhaul in Washington. Now, last month, a Bloomberg investigation revealed 3,300 lobbyists were working on healthcare reform, outnumbering lawmakers 6-1. Now we tell you where they're coming from, which is the ultimate revolving door. And Lizzie O'Leary has that story. Lizzie?
Well, Betty, this is an update on our investigation, and we found out that in Washington, it turns out that you can go home again.
Take the 3,300 lobbyists working on healthcare reform. 2,737 work for industry. Of them, more than half are veterans of Capitol Hill, a federal agency, or the White House. And 55 were once members of Congress, trading hometown constituencies for corporations.
If some former member, former staffer calls a former colleague and says, can I just come up and make a pitch to you for 10 minutes? It's very hard to say no. It's harder much to say no to that person than to you or me or some stranger off the street.
On Capitol Hill, staff members can be equally valuable. Of the 1,200 former staffers lobbying on healthcare reform, more than half tie back to the 5 key committees now writing the legislation. According to one lawmaker turned lobbyist, access is only part of the advantage.
At the end of the day, I'm only as good as what I've got to say. And so I work very hard to try to get my ducks in a row, to try to understand where the public interest lies in any argument that's being made.
Arguments undeniably influenced, though, by an army fighting on familiar terrain.
Companies say it's true the right person helps them make a better argument for what they want. Cigna told us that hiring people who understand how the government works helps them better understand the legislative